Let's get a look at what we can expect, how this all will translate into action today. And for that, we're joined by Evan Lucas from IG in Melbourne. Good morning to you, Evan. We've had, some time to digest the move from the U.S. Fed. So our market's moving on now. Are we going to start turning our attention to other issues out there, in particular this debt ceiling issue that's really looming over the U.S.?
Yeah, what a difference 24 hours makes. A lot of people had come to the opinion that and this was a lot of market strategists' idea, that if the Fed didn't actually move, and that's what they did, that you would see a pop on the day and then a drop off like we saw last night. We were expecting something similar to that happen. The questions now are coming out. Is the US economy really moving as strongly as what people have been expecting? There's also a little bit of Fed bashing going on as well. I know a lot of people were positioned quite short, and that unwind came out very quickly last night and maybe be put back in place. But you now also have to sort of listen to what's going on, particularly over in the US press as well. This will be the third negotiation that President Obama will have to go through regarding the debt ceiling or something along those lines. And it has been a very, very interesting three negotiations if you do look back at it. And every time we've had this kind of closeness, and it's now within 10 days, they are having to raise the debt ceiling by September 30. So it is getting very, very close. Every time the volatility goes through the roof. The first time was in 2008 when he'd just taken office, and it was obviously the start of the GFC. He tried to get through what was called an asset rescue plan. It failed the day after. We actually saw the Dow falling 10%, and that was the start of the GFC. It got passed around about 2 weeks later, but in saying that, it was a bit of a falling factor. And then everybody remembers what happens in 2011. 2011 got very, very close to the wind. We got within 2 days of them actually failing on their debt, and where it was sitting at the time, it was $3.6 trillion in terms of interest needed to be paid on around about 14 trillion US dollars in terms of debt. The issue that comes with this, and the reason the volatility comes about, is that we knew that Bernanke and what he talked about the other day was unemployment and where that's currently sitting. If, and I don't think it will happen, but it will certainly get close to the win, if it wasn't to go ahead, you'd be looking at around about $70 million sort of security checks not being paid, and 20 million public servants over in the US also going without, let alone what you have to do in international and domestic bond purchases and payments as well. So very, very interesting situation. But we did see last night John Boehner coming out and really pushing this whole idea about Obamacare, maybe actually holding up a bill to sort of basically defund it. And with that in mind, that really will put negotiations to the wire. You may actually see the Republicans really, really pushing hard. And that's what markets are now sort of switching their attention to, is, okay, we're past the Fed, we're not happy, but we do see money back in the accounts, and that's great for the markets going forward. But are we going to have a week of increased volatility from political divide rather than actually from what should be going on and actually getting on with the job at hand? And so the next week will be very, very interesting, and watching the US Congress very, very closely to see whether or not Eric Cantor, he's another one that's quite an aggravator in this space, comes out and backs what Boehner is coming about. And it's probably coming from the Tea Party, if anywhere else, Nadine.
Yeah, that's what we've been hearing this morning. If we get past that debt ceiling decision and, the roof doesn't come caving in, will we likely see a reaction on markets such as we did in the wake of the U.S. Fed decision, that pop and then the drop? I mean, what's your sense about the market? Are we due for a pause? Are we due for a bit of a pullback?
We are due for a pause. You've got to look at what's going on, particularly in Europe and particularly in the US. You've already alluded to the DAX is at all-time highs. The S&P yesterday was at all-time highs. Also with the Dow, the NASDAQ is at 13-year highs. So the real developed markets are on an absolute tear, and most of those markets tend to then have a bit of a pause, have a situation, have a think, basically correct, and then move further forward. I'm of the opinion that we are now, here in Australia particularly, moving into a bull market stage. It is a very nice thing to see that even when there has been negative news, it hasn't been the kind of strength or the drop-off that we saw between 2010 and 2011, where we basically corrected completely with anything that we came up with. We now look like really surging ahead. The debt ceiling, unfortunately, is going to be another issue just to sort of create volatility. I don't think it's going to go through. Having seen what happened in 2008 and 2011, it will get passed. It'll just get very close to the wind. It then means that we've got clear air all the way through to basically what's going on in December. I think you're going to see the ASX 200 having a very, very strong little consolidation period, and then moving up to around about 5,400 points. That'll be the first time we've seen that level since basically the start of the GFC. It's been a very, very long time since we've been up there, so roughly around about the start of 2008. It would be a very, very strong finish, and a really good start to next year if we can kick into that kind of level. The fact that China is stabilising, the fact that we're also seeing Japan getting on the wires as well and moving in the right direction is interesting. Talking about Japan, we do see Kuroda out on the wires today. It will be very interesting if he does talk about what happened in the Fed yesterday and what his decision will be with the yen. Obviously, the Japanese are a huge export market, and the reason they've been in a bit of a lull for the last 15 years is because of the deflation they've had, because they can't export their products because of how expensive the yen has been. So watching that very closely, and that also brings to what happened with John Edwards yesterday. Did note that the RBA was talking up the issue with the dollar. He was talking it down. He did want to actually sort of look at and also brought in the prospect of another interest rate cut. So they're the interesting things to come out of the last couple of days. And then the last thing to talk about, tomorrow we do then go towards what's happening in the US. We see Esther George, Jamie Bullard, we also see George Trujillo. They're also all on the wires tomorrow, all coming out of this meeting, all be very interesting. They all have very different opinions. Esther George, very, very hawkish. Jamie Bullard, very, very dovish. The other two quite in the middle, and it will be very interesting to hear what they have to say, considering that two of them become voting members next year. So very newsworthy stuff coming over the next couple of hours and also the next couple of days. So interesting times, Nadine.
Yeah, really interesting times. How about the Australian dollar? It's up around 6% so far this month. Obviously a big headache for the RBA. We have seen it pulled back a little bit with some of the US dollar strength returning. Do you give any forecast for the short to medium term? I mean, there were even some market commentators out yesterday saying that they would no longer rule parity out of the question.
Well, yeah, and we would be of the same opinion. If we do see, particularly the November sort of meeting, which is Melbourne Cup, so that's the 5th of November, going through without any changes in interest rates, yeah, parity is certainly on the cards by the end of the year, considering the strength. And if we again see the October and November Fed meetings again holding the line, with Bernanke's probably going to go maybe through the end of his tenure without changing any of his current situations, yes, parity is certainly on the cards. It's a very interesting time for the local market, and that may be the drag that actually keeps us under, you know, some people's expectations of 56 and even as high as 5,700 points by the end of the year. The Aussie dollar is our biggest concern now, and whether or not the exports that we put out there, being, you know, an iron ore producer and a major commodities player, it is our biggest drag, and that's why over the particularly last 24 months, it's been very, very hard to get ahead, Nadine.
Okay, Evan, you mentioned some of the news points we're watching for on the wires today. Let's talk sector specifics. Obviously, gold, energy will be in focus. Where are we looking?
Yeah, I would be watching, again, yesterday we saw gold having an absolute tear. We saw Newcrest up around about 7.5%. Then you look at the smaller plays, Kingsgate Consolidated had 21% jumps, Medusa Mining as well. Watch those spaces, they may have a correction. We did see gold just moderating last night, just holding the line. You may actually see a bit of profit taking in those sectors. And then watching the energy play, we saw, as you alluded to, Libya is back online. We're actually seeing a little bit of less tensions coming out of the Middle East. So oil prices drop back. Watch the likes of Woodside, Santos. They will be affected slightly by this. Probably not as much as if you went to some of the producers over in Europe and the US. They're more gas on the gas side rather than oil, but it will be a sector to watch. And again, anything that had risk on yesterday and a really big risk on may just see some consolidation. We are seeing the ASX pulling back around about 10 points. It's not a huge move to 52.85, and that'll be, you know, if we can hold that kind of level, that's a very, very solid finish to what's been a really good week.
Okay, Evan, look forward to checking in with you a little bit later on. Thanks so much for your time now, though.